Hello traders, welcome to another daily analysis. Today is January 12th. We are Thursday at 6:43 p.m. Eastern Standard Time. First thing first, there will be a Janet Yellen speech given at 7 p.m. So it's really just around 15 minutes away. I might stop the video and record the next half. So it's really we will see. I don't even know if that speech is live. And I don't even know what that speech is about. But really, whenever central bank speaks, it's quite important for me to pay attention to. So take a look at today's analysis. With no tier 1 data over the London session. Now, New York session, we have the ECB monetary policy minute. And the minute didn't really provide too much insight, but you see a little bit divergence among the ECB members. Now, you also have divergence actually from many different economics from many different countries. You have to remember that Eurozone is a zone, right? So it's many different countries. Now, what happened right now is that the economy has picked up, but that's mainly for a stronger nation like Germany. And the stronger nation, while the economy has picked up, of course, does not want to remain in a low rate situations. So the quantitative easing has very little meaning for stronger nation like Germany. So that's why they will urge ECB to lift the QE program as soon as possible. However, in the Southern Europe, where you have more poor countries, are still benefited large from the QE program. So it's really the paradox of Eurozone, is that you really, in this sort of a big family, you really have a different people with different economic health. So that's why it's really hard to have one policy fits all. Unfortunately, that is the creation of ECB. And that's why the divergence has started appeared because last week and this week we all have pretty good economic data from major European countries. But as for now, the ECB still remain their view to continue easing as scheduled until December 2017. But it really expect all this just tell me there is a piling amount of uncertainty right now, economically speaking, not to mention politically speaking, it's even more unstable. So because of that, I'm still holding this negative view toward euro. I know because the economic data has shifted a little bit, so people might say that maybe euro will become bullish. I really don't think in that way. That's only in a very narrow scope. But if you're looking at a micro view, really the uncertainty is still large in terms of euro. Now, of course, because of the US dollar and the euro, the natural relationship of this pair, euro dollar. So euro, of course, will always be benefit, on and off whenever dollar is weak, and that's what happened in these 2 days. Ever since yesterday's press conference by Donald Trump, we really saw a large selling into US dollar, and of course that's benefit euro a lot. So in conclusion, uncertainty remain high, but whenever dollar is weak, you expect to see euro gain strength. US dollar we have the unemployment claim today come from US. It's again came as a positive number. So the job market is really strong. The labor market is really strong. So everything fundamentally speaking has worked out well. And really dollar is suffering from this negative sentiment from Donald Trump's press conference yesterday. FOMC member Yvonne and Harkin both spoke today and basically expected rate hike from Federal Reserve for 2017 is still around 2 to 3 times. And they even say that if the policy from Donald Trump has overheated the economy, basically they will have to hike interest rate further. So all these are actually very positive for US dollar. And unfortunately, that's not what happened right now. So there's really two ways you can play around. If you play with the sentiment, then you want to follow with the sentiment. So you want to sell US dollar, although you are going against the fundamental side. But understand trading is not just give the prediction like economists. It's really what's happening in the market. So if the sentiment is negative and you want to see what happened to the chart, what happened to traders, and if people are selling the US dollar, then you can definitely go with the flow by selling the US dollar if you are a short-term trader. Me more on the mid-term swing trade, this is actually the chance for me to buy at a relatively a better support zone. So for me, I'm really still looking to buy at deep for daily chart. But if I'm trading, let's say in hourly, 4 hour, then definitely I want to go with the trend. Providing the sentiment is really in the negative side, then yeah, selling US dollar versus euro, even versus Japanese yen will be a good strategy. Now, of course, I understand that you already dropped about, from the high of 118 in terms of Japanese yen to 114. You already dropped about 300 to 400 pips already. So really, you can still get in, but really you have to have your own strategy to get in at a proper level. The equity market today, closed down, but the WTI went up again. So it's sort of a mixed view. The sentiment is definitely off. But the oil market went up because there's two positive news. First of all there are three positive news. First is the dollar weakness. Of course, that's always going to help the oil market because oil is denominated by US dollar. Second is that the Saudi Arabia has shown the record of output curve. So it means that they're really following the OPEC agreement and they cut the output. And the oil minister from Saudi also came out saying that they are expected to continue cutting in February. So of course that's very good for the oil, and hence that's helped the oil market, and that's also going to help Canadian dollar. Another third positive news is that China forecast is that 2017 the crude import will actually be 5% more than 2016. So what's happening is you have increased demand and decreased supply. Low supply, high demand, of course, that's going to help the oil, and that's going to help Canadian. So Canadian dollar first continue to benefit from this phenomenon, and it's really one of the strongest currency right now. For US dollar, again, right here, as I mentioned, you can either buy at deep if you're a mid-term to long-term trader, or you can go with the flow shorted. For British pound, today we have another fresh new negativity because the Prime Minister May is reported to speak next week on her plan for Brexit. Now, it's really no specific agenda, but market immediately saw it as a negativity because they think that she is going to give a talk about hard Brexit. So again, pound continue to suffer from this sentiment. Now, the only thing that might switch this sentiment, there's several factors. The first is the High Court ruling. Now, don't forget the High Court ruling is due to come out this year. They say it's come out March, but really it can come out anytime. It can come out anytime. And if the court ruling is in favor for the parliament, then that's going to be a very positive news for British pound. Another factor is the Northern Ireland, that we have this talk right now. So the Northern Ireland might actually delay the Brexit talk. So that's second factors that would be positive for British pound. And basically, if you want to sum up, is that whatever forces that you have to stop the Brexit negotiation is all going to be positive for British pound. So basically, if the negotiation can never happen, if they can just drag it as long as possible, remain the current situation as long as possible, then essentially Brexit does not happen. So that's what will be positive for Britain. As soon as the negotiations start, even if you don't have any new update, as soon as the negotiations start, you will see a negativity. So that just really shows you how vulnerable Britain is, that nobody thinks they're going to win in this negotiation. It's because all the good cards are in Germany's hands. So really, Britain has no chance to bargain for anything just because they are too small to to be even on the bargaining table, basically. And that's just the way it is. So as soon as the negotiation starts, that's all going to be very negative for British pound. From Australian and New Zealand dollar, they both are benefited from the weak US dollar. And they will continue to surge as long as the US dollar remain weak. But of course, fundamentally, as I mentioned, Australian dollar and New Zealand dollar are both quite good. They're very neutral. Sentimentally, they are also neutral. And in this nowadays, whenever it's neutral, it's actually stable, which means it's actually good. If you see the US dollar regain the strength, of course, that's going to hurt the Australian dollar and New Zealand dollar. They're gonna lose ground quickly because they are the largest buying currency right now. So if you climb up, the faster you climb up, the faster you're gonna fall. That's just the nature of the gravity and also the nature of trading. For Japanese yen, Swiss franc, they both also benefit from this risk of sentiment and the US dollar weakness. So that's pretty much the pictures we have right now. And let me get into the chart right now. Actually, you know what? It's almost 7 o'clock. I'm actually gonna pause for now. I'll be back in the second half. I'll see you later.